Welcome to the Ask Ralph podcast, where listening to an experienced financial professional can help you make sense of confusing questions, current headlines, and industry trends about taxes, small business, financial decision-making, investment strategies, and even the art of proper budgeting, as Ralph makes the complex simple by sharing his real-world knowledge with all things financial. Now here's your host, Ralph Estep Jr.
And welcome back to the Ask Ralph show. Let's discuss a topic that every business owner should be interested in, especially this time of year. The top things the business can do at year end to save on taxes. Right now, I'm meeting with my clients, and this is a topic of discussion in just about every meeting. As the year comes to a close, it's essential for businesses to strategize and take advantage of tax-saving opportunities. So let's dive in on some of our top tips for saving taxes before the year ends. Let's see, what do I have here? 10 of these. So we're going to work through 10 of these. Number one is review and maximize deductions. Take time to review your business expenses and ensure that you have claimed all eligible deductions. This includes expenses such as supplies, marketing costs, professional fees, and even home office deductions, if applicable. Maximizing deductions can help lower your taxable income. Well, that's true. And in order to do that, you've got to make sure you've got good accounting records. So make sure you're working with good financial software and or a good accountant to help with you. Number two, accelerate expenses. Consider paying for business expenses before the end of the year comes to accelerate these deductions. This can include purchasing necessary equipment, software, or office supplies. By doing this, you can deduct these expenses in the current year, reducing your taxable income. So basically what you're doing is you're buying things that you know you're going to need anyway. You buy those before the end of the year so you can capture the deduction in the current year. Number three, defer income. If possible, defer income until the following year. This strategy can be beneficial if you expect to be in a lower tax bracket next year, or if it helps you avoid certain tax thresholds. It's really important you consult with a tax professional to determine the best strategy for your particular situation. Now, look, we need to be clear with each other. This doesn't mean that you can not report any sales for the month of December. I've had clients in the past that have done that. I think that's a bad strategy. But if you're getting ready to make a huge sale and you can potentially put that off into the next year, it might make sense to do it, but we need to look at the whole picture. Number four, contribute to retirement plans. This one is huge, and a lot of people don't take advantage of this. Make the most of retirement plans to lower your taxable income. Consider contributing to a SEP IRA, simple IRA, or a 401k plan before the year ends. Now, thing is, I hope you've already set these up. If you hadn't set these up, you're going to have some limitations on what you can do. But this is the time to start thinking about making those final year-end contributions to max out your contribution for the year. These contributions are tax deductible and can help you save for retirement while reducing your tax liability. So another great idea. Number five, take advantage of Section 179. Now, unless you're a IRS tax wonk like me, you probably have no idea what I'm talking about. Well, if your business has purchased equipment or property, consider utilizing Section 179. This is an IRS code section. It's really that simple. This provision allows you to deduct the full cost of qualifying assets in the year they are placed in service, rather than depreciating them over several years. So how does this work? Let's say, for example, in your business, you need to buy a new piece of equipment. Well, generally, a piece of equipment is going to last more than a year, or is going to last more than a month. So what the Section 179 allows you to do is, even though this equipment might have a useful life that's longer than a year, it allows you to write that off in the current year. So that's what we could do to utilize that Section 179. There are limitations, so you need to talk with somebody like myself and make sure you're able to do that. Number six, evaluate business structure. Assess your business structure to ensure it's optimized for tax savings. Depending upon your circumstances, it may be beneficial to consider a different entity type, such as an S Corp or an LLC. Again, it's important you consult with a tax professional or accountant to determine the most efficient structure for your business. This time of year, I'm meeting with a lot of new clients who maybe are sole proprietors, and they're looking for ways to save on taxes. So this is an area where, meet with somebody like myself, and we can talk about the options related to, a standard corporation, an S corporation, or an LLC. You can look at my archive on the Ask Ralph podcast, and I've addressed that in the past, and we'll be doing some more shows on that in the future. Number seven, review health insurance options. If you're a small business owner, one of the things you can do is explore health insurance options for yourself and your employees. Depending upon your situation, offering a health insurance plan can provide tax benefits. such as deductibility of premiums and potential tax credits. We're in a time right now where trying to get and maintain employees is really difficult. So one of the strategies that I've seen a lot of my clients doing is looking at setting up retirement plans, but also offering insurance because those premiums may be a deduction to the business. Number 8, this is real important. Don't forget state and local taxes. While focusing on federal taxes is crucial, don't overlook state and local taxes. Research and understand the tax regulations in your specific location to ensure you're taking advantage of all available deductions and credits. There may be some state-based credits or deductions that you can take which don't apply to the federal level. All the more reason to have a seasoned professional work with you. Number 9, charitable contributions. Consider making charitable contributions right before the year ends. Not only will it be supporting a cause you believe in, but you may also be able to deduct it on your taxes. The key to this is keeping proper documentation of your donations to substantiate your deduction. So what does that mean? Basically, this means you need to have a receipt from the charity, which it clearly explains what you donated. Let's say, for example, you have a piece of machinery in your business that you're no longer using, and there may be a charity that would benefit from that. Then, depending upon the value of that, you may need to get a written appraisal by an appraiser that works with the IRS. So again, charitable contributions at year end are really a wise thing. And number 10, consult with a tax professional. Last but not least, seek the guidance of a qualified tax professional or accountant like myself. They can provide personalized advice based on your business's unique circumstances, ensuring that you are maximizing your tax savings while remaining compliant with tax laws. So there you have it. Our top things the business can do at year end to save taxes. Remember, tax planning is an essential part of running a successful business. By implementing these strategies, you can minimize your tax burden and keep more of your hard-earned money. And isn't that what we all want to do?
Ask Ralph will be right back.
I want to take a few minutes and tell you about a book I just finished writing. The name of the book is Mastering Your Finances, Your Personal Guide to Financial Freedom. It's not just a book, my friends. It's a roadmap to a secure and thriving financial future. As a seasoned accountant, I penned this book to put the power of financial planning right at your fingertips. It promises to transform your financial landscape from a confusing maze of numbers and jargon to clear, well-trodden path towards prosperity. In my book, I unfold the often intimidating world of finance, breaking it down into easy, digestible sections. It provides you with real tools and knowledge to craft a personal financial plan that aligns with your unique goals and aspirations. I hope you'll get it and discover the profound impact of strategic financial planning as your journey through real-life examples, practical tips, and insightful advice. Mastering your finances is more than a guide, it's a lifeline to financial literacy and independence. Take control of your financial destiny and embrace the freedom that comes with financial stability. This book is an essential read for anyone seeking to navigate the world of personal finance with confidence and ease. You can find the book on Amazon.com. Just search for my name, Ralph Estep, and you'll find both paperback and Kindle editions. And I really hope you check it out.
And now back to the podcast. Thank you for joining us on the Ask Ralph podcast. And with a simple click to subscribe, we'll invite you back to our next episode. And remember, financial issues don't have to be complicated. Just ask Ralph. The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media, Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.